Good evening. This is Ken Long from Tortoise Capital. I want to take a look at 5 setups for tomorrow's market, and then a look at 3 trades that were closed out today. First one I want to take a look at is PowerShares Deutsche Bank Commodity Blended Index Tracking Fund, symbol DBC. This is a blend of basic metals, precious metals, grains, and energies, sponsored by Deutsche Bank. You can see this moves in long ocean-like waves. We're just at the end of a downward cycle that came in at about 21.5. We highlighted this last week. And today what we had was a big gap up and then a doji indicating hesitation. However, we're still on the correct side of value. So the blue line is when we're going to frame this trade. If you go with a tight stop, you're at the first red line, a nickel below. The next one is below this swing low, which puts you about 21.25. The previous sell-off lower on July 13th would put us in here at about 20.5. We've got a number of different targets we could be looking for at 23, at 24, then here in the middle about 23.25, maybe 23.5, based on previous resistance levels. But if we're looking for an entry tomorrow just on an hourly breakout or a nickel above the high at about 22.5, you can see that we've got a number of ways that we can frame this trade and get 2 to 1. So I like Deutsche Bank blended commodities for the long run, especially as we see continued dollar weakness. This next set of ideas are the standard triple screen setup, so I'm not going to go too deep into them. Just Kimberly-Clark. Blue line is when all the filters fired. And as you can see, what we've got is we have Williams %R, a close below -80. It's closed below the 20-day moving average. It's got an ADX of greater than 25. It's actually 36. So we have a strong trend. That was the strong trend that got us to the swing high at about 60. We've had this nice pullback, some stability forming at 57.5, but I think we get 57.75. We'd be looking for an hourly breakout after the open tomorrow, or at least an entry at about, looks like 58.45, and then you can see that we have 2 to 1 upside reward to 1 on the downside risk. BB&T Company, same basic premise. Blue line is when we're going to hit the alert. We have a close below -80 on Williams %R. We have a close below the 20-day moving average. We've got a local support already in. Can see some support also at about 26.20. Entry about 26.80. Retest of the previous swing high at 28.5. You can see 2 to 1 on the upside there. The ADX is greater than 25, and that's what produces this long, strong trend. Here's the pullback that creates the investable, tradable opportunity. Here's some prototype setups in what we're calling the 551W. It's positive on 5 weeks, negative on 5 days, and 1 day of white candle momentum. So it's a 1-day reversion to the previous strong mean. I'll frame this one in the middle mark because it's one of my old reliables. It's trading from between 30 and 33. You can get it right now at about 31, so that gives you 2 to 1 upside if you have as much as $1 stop. Intraday, we're able actually to find moments when we can buy this with a 10-cent stop with some reliability. Price is better than the 50-day, which is better than the 200-day moving average, which we like. You see yesterday it was oversold. It hasn't reached back to the -50 on Williams %R, so it's still on the correct side of value. We'd buy this with momentum, especially if we saw market momentum tomorrow. Same in CMS Energy Corporation. That has an even cleaner look to it, a pullback and then a hook, long, strong trend, pullback, definable hook, measurable reward to risk. The last one, Colgate-Palmolive in the consumer staples area. Once again, swing high at about 73.5, pull back to 71. You got some nice tight dojis in here, and strong support at 70.5, right around the 50-day moving average. That one also looks possible. Here's 3 trades that closed. Well, actually, there were actually 4 signals in this one, and we're taking a look at mechanical overreaction system trades in ILF. There were actually 2 positions on this one in this yellow zone. IWM, the Russell 2000, the small caps here in the yellow zone, and here MDY, S&P 400 mid caps in the yellow zone. So the trigger occurred vicinity when it was oversold on Williams percent R less than -80. You can see in the past all these areas where the green rectangles are, those are all previous trades in this same system, which when it gets to oversold conditions, we're willing to take positions and play the reversion to the mean by going long in a bull market after a measurable dip. This is a high reliable system, and in the yellow was the most recent series of those trades. 4 of them closed properly. Intraday today was a tough one. I was not available to trade the early morning session. I missed what would have been my normal entry in CLF Cleveland Cliffs. I was available back in here. I was monitoring the shelves. I took this trade here. Trade 1 was a scratch almost immediately after entry. Didn't work. Had another shelf. I was prepared to take the next one. I missed the universal entry on a resumption of this trend here, which it started to sell off but found support at 26.5. Missed my entry to add another position, and I got bottom ticked on this one around 26.95 for 1.5 hour, and didn't trade it the rest of the afternoon. So that was some heavy sledding through here. Missed one, got one, missed the easy move in the morning. The last one, Coca-Cola. This one was also hard work. Here's the open range 5-minute candle here. Note the top of that support. That becomes really important the rest of the day. It often is on a trending day. Forms initial support, and it holds all during the day. Here was the easy move in the morning from 50 to 50.80, and so that's almost 1 3/4 percent move in the first half hour or an hour of the market being open. I was not available to trade. The second trade after the big red candle, I was looking for a max pain and a morning hook, and there it was. Got my entry, immediately failed and reversed and scratched me out a -1R on my normal size bullet. There was a sell-off. Take it the second time. I get my entry. It starts failing again. I end up scratching this trade, a little gun shy from the first one. It finds support, though, before it makes a new low. I like that. It finds that support right around the OR5, so I'm willing to buy the second white candle on the breakout. I buy here with an initial stop just below, and it works really the whole day, and the 20-period moving average works as a nice buffer all the way up, and decide not to hold this overnight because the market is fully valued, and get the exit around 50.4. And I once again getting bottom ticked on that little pullback, but that trade comes in at 2, so -1, a scratch, and +2, so it nets 1R for the day. Hard work for 1R, but sometimes that's what you get. I do like the fact that Coca-Cola closed north of 50, which has been an important intermediate term resistance level, and which now may be support. So there's clear sailing overhead out to 52 and 54 with Coca-Cola. So I'm willing to buy any evidence of tactical momentum in Coke, especially if we have some market push behind it. With the market closer to overbought than oversold, I'm not expecting a lot of market support here, but if SPY gets through 104, that's a new swing high, and then it's clear sailing for the market, and that would be a sign to be on board Coca-Cola in a big way. So that's a quick look at some tactical updates, some setups, and then some actual trades we closed during the day. So thanks for your attention.